वेलकम टू वीलर्न में आपका स्वागत है. We are discussing marketing of bank products, session 8 under the subject banking operations. Topics covered are bank marketing, formulation of marketing mix, promotional strategy in banks, relationship marketing, distribution channels in banking, how to design an effective distribution channel, types of channels and intermediaries, factors affecting choice of channel, target market consideration, services offer consideration, intermediary consideration, and service firms consideration. Bank marketing. Bank is a financial institution, and the basic role of bank is to accept deposits and channel the deposits into lending activities. Now when we talk about bank marketing, it refers and includes all those activities which cater to the financial and other related needs to the customer. Keeping in mind that the objective is to satisfy the customer. Now, customer deposits their money with the bank only if the bank is a trusted name in the industry. And bank, it gives loans only to the trusted customers, those who have passed all the credit checks. Now for the banking industry, trust is very important than the capital. With ever increasing financial needs of people and changing preferences and beliefs, banking has gained a lot of importance for all classes alike. Since market is also expanding, corporate lending has become a very important area of business for many banks. This could be showed with the help of an example also, because SBI, it has reduced its home loan to 8%, and HDFC, it has reduced its loan to 8.25% to retain the customers. When we talk about the formulation of marketing mix, अगर हम बैंकिंग सेक्टर्स के पर्सपेक्टिव में बात करते हैं तो इट बेसिकली कंसिस्ट ऑफ 4+3 P's ऑफ मार्केटिंग. हमारे ट्रेडिशनल मार्केटिंग मिक्स में 4 P's हुआ करते थे. दोज आर प्रोडक्ट, प्राइस, प्लेस एंड प्रमोशन. बट व्हेन वी टॉक अबाउट मार्केटिंग मिक्स विद रिस्पेक्ट टू बैंकिंग सेक्टर, देयर आर 3 additional P's which are attached to the marketing mix. These are people, process and physical evidence. When we talk about the products or service offers, so these are basically the services which are offered by the bank. It would be its product. Now banking product, they basically include saving account, current account, term deposits, cash credits, certificate of deposits, convertible or non-convertible debentures, commercial papers. They also include loans, all types of loans they also include. So all these products, they are designed in order to meet the various customer needs. Now when we talk about price, so price is basically paid by the customer who decides the demand for the service, and it is also the margin and revenue generated by it. Now banks have been generating revenue mainly by charging interest on loans, but with a changing scenario, banks, they have got into other sources of income also. These sources of income are like annual credit and debit charges. So there are penalties on the delays in payment. There are commission on cross-selling. So these pricing policies, they must be very cost-based and customer-based or competition-based. When we talk about promotion, banks, they are advertising heavily to attract customer. So because there is a huge competition in the sector, there are players like SBI and PNB. They have also started spending extensively on promotions also. So designing a promotional strategy, it involves advertising, sales promotion, publicity, personal selling and direct marketing. When we talk about place is referred to as distribution or service channels. So banks, they are almost direct in their approach. So nowadays they are also providing alternate channels for banking. These are like internet or telephone banking, ATMs or plastic cards or mobile ATMs. When we talk about people, they are the most important aspect in banking marketing. So the human resource, they play a very vital role in deciding the fate of the company. So the bank, they should hire people, those who have adequate knowledge about the banking products and the current scenarios in the banking industry. So the people at the bank, they should also be very helpful and patient, because people who come to bank for opening an account or for loan, they often do not know the procedures. Therefore, it is the responsibility of the assigned person to deal with them patiently and to solve their problems. Then comes process. Process is a very technical tool for service marketer to achieve this goal. So people tend to include the service delivery in the service itself. So all the work, it can be described in the form of a process. So all the activities, procedures, tasks and mechanism, they are part of the service delivery process. Then comes physical evidence. It refers to the service scape and all the tangibles which are attracted to the service and which are attached to the service. They include facility design, the equipments, the signages, how the employees are dressed, the documents, the business cards. They're all part of the physical evidence. So they give a very tangible feel to the service. In case of banks, the temperature, the air quality, the noise level, the furnishings, they matter a lot, and people, they feel good when all these things are taken care of. When we discuss promotional strategy in banking industry today, it is facing very intense competition because of the opening of the economy and the entry of the foreign buyers. Now Indian banks, they have also geared themselves and they have started upgrading their services and they started promoting themselves very extensively. Banks, they use a lot of promotional techniques and tools like personal selling or discounts, etc. They have also tied up with various petrol pumps to have their exclusive ATMs there, right? They have started investing very heavily in advertisements. They have tie-ups with the malls and retail outlets for setting up of their ATMs and increase usage of the bank's debit cards. Now the customer care executives also, the contact with the customers, they personally have and on phone to recommend new services to them. Banks, they have also tied up with various other companies for mutual benefits as well as the customer benefits. When we take the example of ICICI Bank, it has tied up with HPCL to offer a credit card to the customer, which offers them discount and freebies, right? Banks, they also do segment advertising like they advertise for children education loans or travel loans. Then comes relationship marketing. Relationship marketing is basically a process of attracting and maintaining, and in multi-service organization even enhancing customer relationship. Now when we talk, the customer is basically the main compelling feature for focusing the activities of the service marketer. Now the service marketer, they should concentrate on the service transaction process, less with the intent to hook the customer and turn the encounter into a successful sales transaction. Now the service marketer, they should build long-term relationship which results in repeat encounters. Relationship marketing, or relationship between the customer and the banking service, it provides it keeps on changing from time to time of their acquisition to their retention. In the beginning, the relationship is that of prospects of mutual evaluation. After they have decided to choose each other, the banking firm re-designates the prospect as a customer. Now he has a potential and there is a tremendous scope for them to symbiotically grow with each other. For a banking firm, its marketing philosophy should take care to acquire the customer, then to retain the customer, and then to do business only with the profitable customers. To understand with an example, the BPL Mobile and the ICICI Bank, they have co-branded the ICICI BPL credit card program, which are providing gains to consumer as well as to the partnering organization. When we talk about the distribution channels in banking, they basically consist of set of people or even the firms who are involved in the transfer of goods and services. Right? So the end user could either be an individual consumer or an industrial consumer. Now the channel of distribution, it also includes the producer of the goods and services, the consumer of the same, and a series of middlemen like wholesalers, dealers, retailers and agents. Now the channel for any offer, it is basically extended to the last person or the institution who buys it without making any change in the form of the offer. If there is any change in the form of the offer, then there will be another channel of distribution. Now, how to design an effective distribution channel? Now, specifying the role of the distribution, the service firm, it should be very clear about the role it sees of distribution in the context of other elements of the marketing mix. The distribution, it should synchronize with all the other marketing orientations and objectives. Now there are certain steps. The first is selecting the type of channel. So when we say the banking firm should choose the most suitable distribution channel for its officers, which should be effective in achieving the firm's goal. This is where a need for an intermediary would be felt and a decision on the type of middleman should be taken accordingly. The second is determining the intensity of distribution. Here the firm, it has to decide on the intensity of distribution. If it is intensive, then the number of middlemen required would be more at each level of distribution. But if the distribution is limited in nature, just in case of introduction or a trial stage, then there would be lesser number of middlemen. The third is choosing specific intermediaries. So once the banking firm, it has decided on the channel, it is now required to choose the specific firms as their intermediaries. So if Kotak Mahindra Bank, it has chosen to sell its products online, it could choose from a host of e-business firms like Rediff or Bazi or Yahoo.com. Now the banking firm, it has to choose specific firms in specific towns that would enable it to cover specific markets. When we talk about types of channels or intermediaries, there are two types of channels. First is the direct distribution, another is the indirect distribution. Direct distribution, it does not involve any middleman, and it has only the producer and the end user. Here the firm, it reaches directly to the consumer, and the banking industry mostly uses this mode of distribution. Only those goods are marketed who have strong finance and can afford to lock up a lot of their capital in inventory, or whose products have high technology. Now when we talk about indirect distribution, it consists of producer, the end user, and at least one of the middlemen or intermediaries. For consumer and industrial goods distribution, there is more than one intermediary, while services, they have one middleman, that is the agent. Now, factors affecting the choice of channels. The primary factor that affects the choice of channel for a banking firm is the nature of the market and also the service consumer buying behavior. Now, the second most important factor is that affect channel choices. They are the service providers, the intermediaries, and the banking firm itself. When we talk about target market consideration, now there are certain characteristics, market characteristics, which are influence to a great extent the choice of channel. The first is the type of market. So if the end user, they are individual consumer, they would be better serviced by the retailers. For business or institutional consumers, now second is the volume of consumer. So if the number of consumers is large, then the middlemen are used. If the consumers are lesser, like business consumers, then the banking firm uses its own sales force, like advertising agency or client servicing. Then comes geographic cluster. So if the consumers, they are clustered in a certain geographical area, then it would be feasible for the bank to use its own sales force. But if the customers, they are scattered over the geographical areas, then the travel cost that might dictate the sales personnel a costly proposition. So intermediaries in such a case, they are used for such market. Then comes size of the service contract. Now if the size of the service order is large, then the distribution is most of the time direct. But if the size of the service order is small, then intermediaries are used. Service offer consideration when we talk about, so the choice of channel is greatly influenced by whether the offer is good or a service. So that there are certain characteristics of a service products like tangibility or inseparability, which act as a major influence. The first is the perishability and intangibility when we discuss. So the lack of storage, it makes middlemen redundant in service distribution. There is no need for holding inventory or breaking bulk or giving varieties or assortments. So those services which have a higher degree of tangibility in the product service continuum will travel and they require service intermediary also. The second is the concept product. If the offer is highly technical and conceptual, which is making it very difficult for the consumer to see the end product or the benefits in the usage, then the personal selling and the very persuasive marketing would be required. Third is the unit value of the service. So if the service value is small, like collection of the bills for telephone services, then the distribution is done through intermediaries. If the unit value of the service is large, like leased line connectivity for the internet or managing a complete travel business, this is seemingly similar to the nature of the market and the size of the contract, which we have discussed earlier. Now, intermediary consideration when we discuss. So, the channels which are chosen by the service firm, they are greatly influenced by the availability of intermediaries. So, there may not be any intermediary which is doing business in the service firm's chosen area, or even if they exist, they may not be able to service firm as they may be associated with its competitor. So in both the cases, the onus of developing an intermediary or going for an alternative channel lies on the service provider only. Second is the service provided by the intermediary. An intermediary is chosen for his capability of providing those services which the service firms would themselves would not be in a position to provide. So for international service firms, when we talk, this would include contracts or market penetrations, legal and other services and storages. Lastly is the attitude of intermediaries towards the service provider. So the intermediaries, they might have negative attitudes towards the policies of the service providers that may not be willing to be associated with them. Service firms considerations. There are major factors that influence the choice of the channel in the service firm's owns consideration. The first is the desire for greater control of the channel. The service firm, they may have a desire, they may lay great store by the right service experience where an encounter leads to a positive experience by the customer, and finally the customer's retentions would like to take control of the service delivery process and therefore service distribution. Second is management ability of the service producer. There are some service firms, they may not have the distribution ability with or demanded by their service offer design and delivery. So intermediaries are then involved in the distribution of service offer. Then comes financial resources of the service firm. A service firm who is strong in its finances or financial access will be able to distribute its offer itself. Last is the service provided or shared by the firm. The choice of the channel is basically decided by the service provider depending on the types of services demanded by the intermediaries. So the middlemen, like retailers of mobile phone products selling SIM cards or handset, they insist that the glow signs, trade shows and the exhibition costs, they are shared by the service firms. Two exercises. What are various factors affecting the choice of channels, and what are the distribution channels in the banking? Thank you and have a nice day. Keep learning and relearning.